How do I buy a property in New Zealand if I'm based overseas? Well, lots of people want to invest in New Zealand, especially overseas Kiwis. And that's because the New Zealand property market has delivered consistent capital gains over time. There's no stamp duty and no formal capital gains tax. And that investor-friendly tax system is one of the reasons New Zealand is an attractive place to invest. But if you want to buy an investment in New Zealand from overseas, then you need to know it is technical, but it's not impossible. So in today's video, we're going to talk about, can you legally buy an investment property in New Zealand, how much deposit you're going to need, and then how the bank looks at your mortgage application and how much money you're going to need. Now, in 2018, the newly elected Labour government introduced the foreign buyer ban, and that stopped a lot of overseas citizens investing and purchasing investment properties in New Zealand, and they did that through a change in the Overseas Investment Act. So you might be thinking, well, who's allowed to buy an investment property in New Zealand? Well, if you're a New Zealand citizen, no matter where you live in the world, whether that's Uruguay, Sudan, or Myanmar, you can still legally buy an investment property in New Zealand. So this is Greg. He's a Kiwi living in Alberta, that's in Canada, and he wants to buy an investment property in Christchurch, and he's got the money to invest. Well, because he's a New Zealand citizen, he can do that. He doesn't need any special permission to invest. And even if you're not a New Zealand citizen, that doesn't mean that you can't buy property in New Zealand. So if you're an Australian citizen or you're a Singaporean national, you can also buy property in New Zealand without special permission. Let's go through an example. Here's Sharon and Dale. Now they live in Singapore and she's a Singaporean national and he's a Chinese citizen. Now they want to buy a property in Auckland. Well, because Sharon is Singaporean, they also don't need any special permission to purchase that investment property, even though Dale is not Singaporean himself. But what if you're from somewhere else in the world? What if you're from Brazil or Algeria or Vietnam? Well, you can still invest in New Zealand, but you can only purchase certain types of property. So hotel rooms and apartment blocks that have got special permission from the Overseas Investment Office. Now, the rules here are complex, and we're not going to go through every single detail in this video today. So make sure you check out our full article on the Opus Partners website to get the rundown, and I'll put the link down in the description. So how much deposit do you need to buy an investment property in New Zealand if you're based overseas? And how does that compare to if you were living over here? Well, if you're based in New Zealand and you're buying a new build as an investment property, you only need a 20% deposit. But if you're based overseas and investing in a new build, most banks will need you to have a 30% deposit. And it doesn't matter whether you're a New Zealand citizen or not, doesn't change it. So let's say you want to buy this $800,000 townhouse in Auckland. If you're based in New Zealand, you'll need a 20% deposit, that's $160,000. But if you're based overseas, you'd need 30%, that's $240K as a deposit. That's an extra $80,000 for that new build. Now, there are some exceptions where you could still buy a new build with a 20% deposit, like if you're paid in New Zealand dollars, if one partner is living in New Zealand, or sometimes if you're using a non-bank lender. But these are general guidelines that apply most of the time. So those are the rules for a new build, but what if you want to invest in an existing property? Well, if you're based in New Zealand, you need a 40% deposit. What if you're based overseas? It's the same, still 40%, that's what you're gonna need. So let's say you wanna buy this house and it's in Hawke's Bay for $800,000. Well, whether you're based in New Zealand or overseas, you're still going to need a $320K deposit. Now, one of the hard things when you're overseas is that you might earn a big income compared to what you would have earned in New Zealand, but the banks won't generally count it all when they run their numbers. So let's go through an example of how they actually calculate your income. Let's say you earn 90K a year in Australia, and that's in Australian dollars. Well, first they're going to convert it into New Zealand dollars. At today's exchange rates, that's about 100K, but then they're typically going to take 20% off to account for exchange rate movements and other types of risk. So they're only going to use $80,000 in their calculations. Now, this is one of the things that can make it a wee bit harder to buy property in New Zealand if you're based overseas. And that's because under the bank's calculations, that what we call sensitized income has to cover both all of your overseas expenses and any shortfall on the New Zealand rental property when they look at it under their test conditions. And if you want to know more about those test conditions, we release 2 new videos a week on this YouTube channel. So if you're enjoying this, make sure you hit subscribe to see videos on that topic. But if you want to know some of the things that the bank will look at, they're going to look at your overseas mortgage, any credit cards, your living expenses, and this is an interesting one, where your income comes from. Because if you are self-employed, for instance, let's say you're a freelancer, many of the banks won't lend to you. And that's because your income source is seen as more risky than if you were paid a normal salary. Now, there are some ways around this, but one of the issues that makes this really complex is that every bank has their own credit policy. And you can't just Google this, try and figure it out on your own, because A, who's got time to read and understand a whole heap of complex bank rules? But B, you can't actually find those credit policies online. They're only given to bank staff and to mortgage brokers. And that's why it is really important that if you want to buy an investment property while you're living overseas, that you use an experienced mortgage broker. Because a good broker will read all of the bank's policies and figure out which of those lenders is most likely to approve you so you can apply to that one. And if you're looking for a recommendation, check out our list of the top 10 mortgage brokers in New Zealand. You can find it on the Opus Partners website, and I'll drop a link down in the description.